Hello guys, in this video we'll explain how beginners can become investors by debunking some myths and making some practical advice. Firstly, investing can wisely protect your money from inflation, which is now pretty big. Secondly, investment can provide you with a passive income. And thirdly, investing can make you get rid of the office and the boring job. It is actually a myth that investing is like gambling. With a careful approach and a proper risk assessment, building an entirely strong portfolio is pretty easy. So if you're ready to take control of your financial future, keep watching. Even if you only have, for example, 20 euros, $20, you can start investing right now. Warren Buffett, who is one of the richest people in the world right now, started from just $115. To start, just set a specific amount of money as your final goal. Deciding where to invest money is the next step. The primary types of investment are the instruments traded on the stock market. Electronic platforms bring together sellers and buyers on one platform. A broker acts as an intermediate to help individuals access the stock market. Investing in stock is a risky investment because it involves buying a share in a company. You can earn money by purchasing low and selling then high. Companies also pay dividends to their shareholders at the end of the quarter or at the end of the year. Investing in bonds is more of a conservative and stable types of investment. Bonds are debt securities issued by companies or governments, such as corporate bonds or government bonds. Bondholders receive regular and stable coupon payments. Essentially, investing in bonds is like lending money to someone when they owe you the amount plus the interest. Investing in gold and other precious metals is more of a defensive types of investment. It is traditionally believed that these instruments are strengthened during the times of crisis, recession, and high volatility in financial markets. It is also worth considering collective investment options, such as unit investment trusts and exchange-traded funds, ETFs. Returning to bonds, the stock market offers both short-term and long-term bonds. The former provides quick but not high profit guarantee, while the latter often allows for a higher rate of return, but after many years. Investment funds pool money from the individual investors to create a diversified portfolio. The aim of it is to reduce risk and increase capital gains. Essentially, a mutual fund is a basket of money collected from many different investors and professionals who invest money in different securities. By pooling resources, the fund can buy multiple and a large number of securities, allowing investors to directly or indirectly own a great number of assets. Overall, mutual funds is a simple and convenient way for individual investors to gain exposure to a wide range of investments without having to manage their portfolio themselves. It is a hands-off approach that can save you time and effort while potentially generating a pretty good profit. So the next topic, what we are going to talk about, is conservative and risky investment strategies. Guys, as you can see, I have changed my clothes. It just happened because we were planning to film two separate videos. However, we understood that the topics of those videos are pretty correlated, so we decided to film only one. So the topic which we're going to continue with is conservative investment strategy and the aggressive investment strategy. The conservative investment strategy is focused on a long-term and passive income instruments. Those instruments have the minimal risk. They are bonds, gold, and stable stocks with constant dividends. The aggressive strategy, on the other hand, is focused on very high-risk instruments, which includes investing in, for example, small companies where the returns can be high. However, potentially the loss can also appear. Unfortunately, the investment world is full of scams, so guys, be pretty careful and very vigilant where and how you invest. Don't trust anybody who offers you from 50 to 70% of annual profit. That's not true, just disregard those. Magical trading signals that will tell you where the money button is located just do not exist. Verify licenses and documents of those people who offer you this opportunity. So you just have to choose your investment strategy, maybe based on your age, maybe based on your preferences. Either it's gonna be depositing into a bank account, or maybe it's gonna be giving money to a management company that will invest for you. You just have to do it. However, always remember to consider the relationship between income and risk. Let's remember the experience of the other financial American monster, Bill Gates. He managed his investment portfolio as follows. He invested 20% of his money to his own company stocks, and the rest he invested in the stocks of our big and huge American companies. That means he chose the option of investment, then there is a slump in one place, there would be a growth in the other place. In any case, before choosing your financial strategy and starting to invest, I recommend you to at least gain some general financial knowledge. For example, studying the YouTube videos, maybe getting some courses, going to seminars, reading some books about it. You can start with Robert Kiyosaki book, Rich Dad Poor Dad, which has radically changed many people's life. However, when you start to invest, do not expect quick profits. Often newcomers who invest their first $100 eagerly await endless riches for the end of the next day. It won't happen, guys. Unfortunately, it usually takes time, and only with long-term investments, the normal and the good results can be expected. New investors usually have a pretty common mistake of having an insatiable appetite. They see investing as an exciting game and start investing everywhere at once, while the proper strategy is more important here. Take it slow and move forward step by step, evaluating and weighting each action. Humanity has been investing since its relatively civilized history. In ancient Babylon, the authorities encouraged their citizens to make the financial investments, which by the end, in the final, made Babylon one of the richest and wealthiest cities in the world at that time. However, a few hundred years later, investment played the opposite role during the tulip skyrocket. However, a few hundred years later, the investment have played the opposite role in people's life. During the tulip fever in Holland, the price of those flowers has skyrocketed and reached a standard of about $2 million by current price. All countries' inhabitants rushed to breed tulips, neglecting all other economic spheres and all other industries, which seriously undermined the full economy of the country. And actually, by the end, it took a pretty long time to recover. So let's create a full algorithm for you to get started. Keep a clear record of your income and expenses. Find areas where you can save some money. About this topic we were talking about in the previous video. Open a brokerage account and simply start investing in the instruments. Start making your first financial moves, gradually learning theory exploring more about investing through YouTube, seminars as we already talked, of course books, and apply the knowledge in practice and earn some money. Only constant practice and learning will bear fruit. And by the end, guys, I hope this video has a little bit helped you. Maybe you got some new information for yourself. Thank you for your attention. Leave a like for our channel. Don't forget to subscribe and see you in the next video.